Hi, this is Great Forzani with another Don't Miss the Point of Business video. I find when a business owner says, hey, I don't have enough money left at the end of the month or the end of the year, or I'm not profitable enough, or I don't have enough cash, or whatever words they're using, what it really means is this: the business isn't profitable enough. Or you might have someone where the business is profitable and they want to become a lot more profitable. So this is how I like to kind of think of it and work it. Think of your profit and loss statement, because that is the heart of a business, the profit and loss statement. That is your scorecard to everything. So think of the profit and loss statement as a machine, and at the very bottom of that machine is the profit. It's revenue, cost of goods, expenses, net profit. So the bottom is profit, and that's the part that you gotta focus on and build. So you want to build this machine, this profit and loss statement. Well, to build it and make it better and bigger, make it bigger and better, I like to think of levers on this machine. And these levers are levers you pull, and each lever you pull equates to either an increased revenue dollar, a decreased cost of goods percent, which increases your gross margin percent, or a decreased expense percent, which will then, both of those things, increase your net profit percent. So a bunch of levers on this machine, this profit and loss statement. And the way it works is you have to have, each lever is a number you track. And we like to call those numbers KPIs. KPI meaning key performance indicator, but let's just call it a measurable number. So what are the numbers you're measuring? Because those are the levers you pull to grow the profit and loss statement, make it better. How often are you measuring them? And the most important part isn't just what numbers you're measuring and how often you're measuring them. It's, do you have a meeting scheduled with yourself or your team that is around looking at that number, that lever, and making decisions, impactful decisions, that drive effective or more effective activities on that number? So if one of those levers is average transaction, you have a meeting, how often? Who is looking at it? And in that meeting, what decisions are you making that dictate what actions to increase that number, which will then increase the P&L or make the P&L better? And so what are those numbers? Average transaction, units per transaction, gross margins, staff turnover, wages as a percentage of revenue, rent as a percentage of revenue, outstanding receivable dollars, average payment terms. I mean, the list goes on and on and on and on and on. What are those key numbers? Because they're levers on the machine. Pull those levers in meetings where you make impactful decisions that drive effective activities that increase the P&L. That's business at its true heart. And that's how you create better performance, more predictable profit.